I use this 1 minute Forex scalping strategy daily, and trust me, if you don't know this, you are missing out. Okay, so first we need to learn how to identify the inside bar. As we can see, the green candlestick, or some people call it the mother bar, is currently next to a red candlestick, which is the inside bar. Why is it inside? Well, the candlestick body is much lower than the mother bar. So you can imagine the green candlestick is currently the parent of the red candlestick. So let's identify this on our chart. So we have the inside bar support and the inside bar resistance. Now, there are two specific ways to trade the inside bar. The first one really depends after you identify the mother bar, what's the next candlestick. In this case, this is a blue pin bar going towards the upside. So some traders believe because it's a bullish candlestick formation after the mother bar, the market will likely move towards the upside. And there's nothing really wrong trading it like that. However, this method lacks a lot of confluence, meaning we don't have enough confirmation to tell us it's actually going up. So the second method has a solution for that, which is simply waiting until the inside bar is actually broken. We would put our stop loss just below the previous inside bar support, and we would also be aiming to take our profit to maybe 1-to-1 risk reward or the top of the previous area of resistance, which is around the 1-to-1 500 level. This straight away gives us a nice 1.73 risk to reward ratio. And now if we take a look, the market should be heading towards the upside, and there we go. We're nearly reaching our take profit level. The market provides a ton of inside bars, and to prove it, let's just take a look at this candlestick over here. Previous area of resistance and support was around this level. What's important? Well, if we take a look, we had a strong resistance and support over here. What happened? A strong bullish engulfing candlestick bounced off the inside bar support, showing us that it made a new higher high. This is significant. This tells us that the market will likely continue its overall market direction, which is currently going towards the upside. So since now we know how the market reacts, we can either straight away enter of this bullish engulfing candlestick, straight away aiming for the previous area of support and resistance, in this case 1.5 risk reward, or we can actually wait for a push exhaustion scenario, which I typically recommend. So it breaks out over here. That's the push, that's the exhaustion to the previous area of support. You can enter around this price level for a better risk reward. And there we go. This would give us a nice 10 pip gain. So 1.9 risk reward. Beautiful. However, this scalping strategy is not complete without a few indicators. Head over to Trading View Indicators tab and type in moving average. These are the simple moving averages, and they are periods of 20, 50, 100 and 200. So why do I love moving averages? Well, it shows you a lot of information you could have missed. For example, we had the 200 and 100 moving averages moving above the candlesticks. This usually signifies a strong area of resistance. So there might be a lot of sell orders over here pushing the market down, which is scary when we want to buy. So this is why having moving averages on my chart would have made me think a little bit and enter just over here. Why is this a better trade? Well, because it still broke out the inside bar over here, but we also have a significant bullish engulfing candlestick swallowing the previous red candlestick, showing strong bullish momentum while also crossing the 200-day and 100-day moving averages. These simple technical indicators straight away changed my mind as a trader. What I would have done is just increase my stop loss few pips just to cover the 50 moving average over here. I'm covering all 4 moving averages now, which is definitely important. We're currently on a push exhaustion cycle. Where do you think the exhaustion will end? Well, likely somewhere over here, because that's where our drawn trend is, but also that's where the 3 simple moving averages are sitting, the 200, 100 and 20. So let's just see what actually happens. and it goes towards the upside. But there's another trick. If you're sitting on a strong uptrend, you don't want to close off your trade. What's the point when you can actually make more money? So when do you actually close off this trade? Well, in this case, the 20 moving average could be your guide, or maybe even open the 8 moving average. Really depends. But let's see how long it goes towards the upside before it crosses. So the 20 moving average is crossed. This is where you could have potentially closed off your trade. So from 9.5 pips to around 14.2 pips, or even the maximum pip gain of around 20.7 pips, which is beautiful. Okay, lastly, you need to listen to these pro tips to actually become profitable with this trading strategy. First tip, make sure you're trading with the trend. So this is the 1 minute. This is the 15-minute time frame. As we can see, the trend is going towards the upside. Why? Because all 4 moving averages are at the bottom and candlesticks are respecting the moving averages. Every time the candlestick is touching one of the moving averages, in this case the 20, as we can see straight away, lively reacting and going towards the upside. This is very important. Multiple time frame analysis will allow you to understand market structure much more rather than trading only one time frame such as the 1 minute. A quick example so you understand, we entered the trade just over here. We come back to the 1 minute time frame. Look, this is the entry we entered. This is the 15 minute. This is the one. On the 1 minute, what do we want to target? Around this area zone. If we come back to the 15-minute time frame, as we can see, this is the area of previous resistance. This was the entry. We are aiming to take some of our profit just over here. After it broke out, we are expecting a pullback because the market simply moves like this. Bim, bim, bam, right? So what do you expect? Bim, bim. Likely now another bam to the previous area of resistance. This is the way the markets move. You want to follow the higher time frame structure and then scalp on the 1 minute time frame to be successful. Also, make sure to be vigilant for chart patterns on the higher time frames so you can scalp on the 1 minute time frame. Let's say this bullish pennant over here, beautiful pennant, was broken, pulling back. If it doesn't break this area zone, we can enter the trade to continue moving towards the upside, or we can also spot a nice W pattern over here, which also broke out the neckline. Very bullish pattern, so pull back, likely another push towards the upside. So double chart patterns, very important on the 15-minute time frame. You take this information and apply it on the 1 minute time frame, your trading win rate will probably double. And currently, probably the most easiest way to learn the inside bar is actually using this indicator over here. Inside bar finder on tradingview.com. As we can see, lines appear on the candlesticks. I recommend double clicking on the indicator and type in the number of inside bars from 1 to 2. This will give you more accurate readings to find in the inside bar. This indicator is not perfect. I recommend learning the inside bar yourself because trading is your money, not AI's, no indicators. You need to put in the work. And also you can download a free trading journal and a free 28 chart patterns you need to know ebook. Everything is down below, and if you enjoyed this video, make sure to watch this one over here because likely you will love this one as well.